The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. It's my pleasure to be here, and just a real quick thing for those of you who subscribed to my opening call. I have no idea what happened. I sent the charts. They should have been out by 8 o'clock. I've redone it both ways, and I've just sent it to Tommy to post. So hopefully it'll be there very soon. There weren't any changes. The most important thing is that there might be a 2:30 or 2:15 time frame trade. All right, thank you very much. Let's just get right to the numbers. The Dow futures at this particular point are down a little bit. They're down 7. So this is, for me, very interesting, and I'll explain why. Let's go to the Dow chart. You see the Dow chart right here? On the left is the daily. Here's the weekly in the middle. On the right is the monthly, and right here in the corner, have we made a peak D? Top short term yesterday, which is what we were expecting. That's what I was discussing, both in Larry's show and in my Tiger Technicians Hour show at noon, is that we got to that fourth highest peak. And that to me is really important, because what it's saying is that there should be a bit of a pullback. But here's what I'm looking at. You see this daily chart of the Dow? You see the red and green line here? This is called the MACD, the Moving Average Convergence Divergence. And in this particular instance, the MACD, even with a spectacular, really just for considering it is 1, 2, 3, 4, 5, 6, 7, just 7 sessions, today will be the 8th. But in 7 sessions, going from 25,252 to the high yesterday of 26, I think it was 26,109. Let me just type that in so I don't have to keep saying it. 26,109. I mean, that is really a very good rally. That's an 800-point rally. The MACD has not, the green line, the faster moving average, it's actually called the 9-period differential, has not crossed over the red line yet. The slow moving average, that's the 26-period moving average. Hey, that says that for the Dow, there still isn't confirmation of a very strong up move. The stochastics at 62%, that's good, but that's not good enough at 80%. That's what I like to see. Look at the S&P, SPX.X right here. Look at the S&P. Just crossed positive yesterday. Let me just put a little circle around it so you can see what I'm talking about right there. The stochastic is really strong at 91%. I like that. That is very good action. And if you look at the QQQ, 1, 2, 3, there we go. This is the NDX 100 trading vehicle, the Invesco QQQ Trust Series. Now, this you have to watch closely. Look, there's a doji candle at the top of this move, goes to a high of 170. Where did that go? Oh, 178.29. And at something's wrong. 180 round number. Oh my. Oh, I always look for round numbers, especially if it's an index. 180.00, round number high, and a potential F with a doji candle. And that makes this very important. Why? Because the MACD is very strong. Stochastic is really strong at 91%. The on-balance volume is at highs for this recent move, having made its fourth leg to the upside. I have to watch this closely. Now, normally under other conditions, when there's a kind of reversal as we saw yesterday, and that was really a very sharp reversal, it was accompanied by sporadic moments of bad news, market bad news that is, and then there was a rally, and then it would fail, then rally, and even at the end there was a rally off the low. But normally if there is unmitigated bad news, in other words, if there is a headline that is starting to pop up and then becomes a serious headline, you wouldn't have the futures at this particular, now the Dow futures are up 4, the S&P futures is up 1/4. You wouldn't have that. You'd have the S&P futures down 11 to -15, and the Dow futures would be -95 to 110 or more. And that would be followed through negative news. A couple of people had emails saying that they were short. What do I think is going to happen? All I said to them was, I don't have a signal yet of a reversal. And that's not to say it couldn't happen. It hasn't happened yet. And as a result, I'm looking at the QQQ with a very strong technical picture, which says that the 178.28 to 178.80 area for the 9-period and 14-period moving averages in the 120-minute chart after the peak E, that should be the test. If there is a close at any point by 3 o'clock this afternoon, if you're seeing you're at 179.02, if you're seeing the QQQ trading for a 30-minute period underneath 178, then I'd say, hey, got to be careful here. We're in for at least a near-term consolidation. So let's go to Bill in Mass. Bill, how are you?
Hi, Basil. I've got a ticker for you, Aerojet Rocketdyne, AJRD. It's a stock that I've been watching very carefully. Every time it gets to the lower 30s, I figure, okay, I'll buy some. I forget to buy some. It goes to 40, and we're back in the lower 30s again.
You know, it's so interesting.
I'm wondering what you think.
Well, it's very interesting that you said that. I have a list of stocks, and that are over the, not years, but decades, have been fantastic stocks, and they're always on my list. And then they kind of, I just forget to look at them. And then you look at them again, you say, oh my goodness, what a fantastic buy I missed. And it's up 30%, 40, sometimes even 50%. And then you have to look at it again. Now you've got your opportunity, because this one has had, it's not called rocket something for nothing, because when it gets going, it can go from the 28 to the 35 or 38 area in a split second. In a weekly chart, look at this weekly chart, just has fabulous moves to the upside. Unfortunately, it also has fabulous moves to the downside. So Aerojet Rocketdyne Holdings. So is this a kind of a liquid something? What do they do?
They make rocket engines. They have military contracts. They do satellites.
Okay, all right. So they don't. They actually make the machines themselves. Good. All right, good.
Yeah.
If that's the case, I'm going to do this. I'm just doing a real quick Chapman wave notation here. A, B, C, D, E goes to an F. That's what we always look for with fading technicals. Makes a full reversal and even goes to a lower low. And now it's a brand new. You know what? There is. Because of yesterday's action stopping dead at the 14-period exponential moving average, this is AJRD trading at 34.53. Right now, it's down a penny pre-market. And it hit that 34.80 area, and then it just pulled back a little bit. You know what? I like this daily chart. The weekly chart has me a little worried. Can you hold on a second? I'm going to do a little bit of work on it when we get great. Folks, we're back. This is Larry Pesavento's show. This is Trade What You See. Basil Chapman sitting in for him. I'll be right back straight after these messages. And we'll be back with Bill in Massachusetts. The futures are up.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. Basil Chapman here, sitting in for Larry Pesavento. We're on with Bill in Massachusetts looking at AJRD. This is Aerojet Rocketdyne Holdings. I did the daily, weekly, monthly Chapman wave notation, peak D in the monthly, peak G in the weekly, and just starting a leg A, what we call a gray leg A, because it's just the beginning of a move. You know, because it has this characteristic of coming to this trend line support in the weekly chart. Let me just show you this beautiful weekly chart from the low that was made back in 2018, the week of the 9th of February at 24.41. It's held this, both the red and the green lines. The red line is a key support level. The green line is called the Chapman Wave Inside Track buy mode. I like what I see as a risk reward, and this is what I'm going to recommend to you. I would start a position here in the 34.50 area. I'd start the position, and because you've missed it so many times and it's had spectacular moves, I'm going to say to you, why not this time start a small position, but give it, it's at $34.50. So 10% on a small position, 10% risk takes you down to 31. I don't think I'd need that. I just need to see that it holds the 33. Give it about 1.5 of some kind of, you can have a mental or you could put in place a stop. But the reason why I'm saying I'd start the position now, over the next 3 sessions, if it even just wiggles once into the 34.97, if it just once in the next, let's even give it 4 days. Let's go until Tuesday of maybe next week. If we can go and touch 35, that's going to be really good action. So I'm going to say to you, start a position. Let's follow what's today, Wednesday. If you want to call my show, maybe Monday, we'll look at it again. I'm going to say start the position, but give it 1.5. Give it some decent kind of a stop right now. You could even give it a little bit more. But what I'm going to say to you, if it starts in the next 1.5 to 2 weeks, if it even starts to trade in the 35s, that's where you might want to add another position. So I'm saying, right, yes, start the position. I think you've waited long enough, and it is a peak D in the monthly, but the it cannot improve until the daily helps the weekly and the weekly helps the monthly. So this is a starter position. Hope that helps you.
Yeah, I mean, back in, I think it was, November, October, I was talking about this stock with Dave White, and he said, oh, wait until it gets into the low 30s. And then, like a month later, it was at 40.
Oh, yeah, that's what it's not called rocket for nothing. So I'm saying
all right, thank you very much.
Aerojet Rocketdyne holding star little position here, and let's work that position. You can call my show or even give me an email. We'll do this together. But I think you've got yourself, for the first time in a while, another starting position. Good luck.
All right, thank you.
Thank you very much for calling. I appreciate that. Folks, let's just look at gold for a moment. Your gold, now it's up $2.30. This is going to be important because the MACD has just crossed positive for the very first time since it went negative back on the 26th of February. And that high on the 13th. See, gold has been trading basically between 1350 and let's call it the 1280 level, 1278 level for a while. But really, it's been trading between 13, 18, somewhere around there. And even the lows, it's like 2 weeks it's been above 1290. I think that this is going to be very important for gold. The weekly chart says it needs more time. It could stay in this consolidation phase for a little while. You can see in the weekly it's holding the 14-period moving average. It's above the 9-period moving average, and it's just about to bump into the resistance in the 200-period moving average of 1310. So today's going to be a big test. If on a weekly basis, this is only not even halfway through the week, right? Wednesday. So you've got until Friday. If on Friday, gold is trading above on Friday at 4 o'clock, if it closes above 1316, I'd say that is a good sign. Let me just double check. I want that number correct. Yep, 1316. That would be leg C in the daily chart. But what will happen is that weekly chart MACD will deflect higher, and the stochastic will finally try to find some support in the 61 and maybe go to 63%. That's what you need. But I'm looking at this. Let's look at silver. Silver yesterday, when we looked at silver, was lagging. Silver's up 0.04 at 15.41. That is good, but it really needs more. It needs to get to the, silver at 1541. First level to break is 1546, but I really I'd like to see 1556, which would be above. This is a continuous contract for both gold and silver. So the silver contract, the high of the 13th of March was 15.55. I want to see above that. I want to see it tackling the 1560 200-period moving average for the first time since it broke under it on the 1st of March. Day is young. We've got the Fed talk at 2 o'clock. So by 2, let me just give you this scenario. If at 2:30, the TLT, that is the iShares 20-year Treasury Bond Fund, ETF, at 121.73 right now, up 32 cents, has broken the resistance and is above 120, 180. No, I'm going to make it 122. If it's trading above 122, that would mean that the TNX, that is the 10-year yield, has pulled back, and instead of being right now at 25.98, it'll probably be testing the low made 4 days ago of 25.80. That's 2.58. And if that's the case, then I think gold will be moving higher. Is that correct? If yields go higher, then the gold should go higher. So I'm looking at this and I'm saying that's the clue for you. If this afternoon the gold is actually up at 230, gold is up $5 or $6, that's going to be good for gold. Okay, crude oil. Let's just put this in the pie as well. Crude oil is just down 21 cents. Had a really terrific run from the low that was made on the 8th of March, 54.82. Yesterday's high was 59.86. Trading at 59 right now, holding very well. Weekly charts improved. If the crude oil is suddenly trading under 58 by tomorrow this time, that would say that it should be helping the XAL, which is the airline index. Airline index right now at 98.34 pre-market, closed at 98.29. Just been terrible. Now let's just look at Boeing. Boeing is obviously a factor here. Boeing is up 57 cents. It's holding okay. They're 374. I believe a lot of people are saying, you know, if they've grounded the planes, that means that there can't be any really terrible reports about an accident. But at the same time, for them to come up with a fix, if it was the one plane from 6 months ago, that crashed, I think it was 6 months ago, and within 3 months they had given a fix, and they discussed the fix, and the fix was working very well, and we never had the accident, Boeing would be soaring to new highs. This is a little different because it's going to take quite a while to get the relief that they need and the confidence back. So any fix has to be a fix and then tried out for months. I'll be back. Basil Chapman, sitting in for Larry Pesavento. Dow futures are...
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Basil Chapman back again. I just wanted to show you, this is in the Chapman wave methodology. One of the things we look for is an identifiable low bar and then merely count each successively higher peak. I alphabetize them all the way from A to G, but it's at the fourth highest peak, peak D, that other things can happen. That's when we often get the deepest correction or an immediate restart where within 3 bars it goes to the next leg up. So let me show you something here. I had a question from Sandy. Hi, Basil, your thoughts on a pullback entry, Sandy? GPL. GPL is Great Panther Silver trading at 1.03, down a penny, just well, where the market's open. The Dow's down 64, the S&P's down 5. So this is the early going. Let's just do this. I'm looking at this peak D and the daily chart of Grand Panther GPL, and the MACD has turned down, but it hasn't crossed negative, and the stochastic is now at 67%. I liked it when it was at over 80%. That was at your peak D. Now you've had one of your sharper pullbacks, and it's gone from the high of 118, was it? 119, and it's trading now at 102. On a percentage basis, that of course is big, but we're talking about a dollar stock. So the entry point, I would say to you, Sandy, you've obviously been trading this. If you look at the weekly chart, and I love this weekly chart. Look at this weekly chart. You see this cup formation? Well, in the Chapman Wave methodology, what we look for, I'll just drag this across here, and I'm going to show you something I spoke about yesterday. I'll do it again. As far as I'm concerned, there are only three patterns within the context of market moves. A straight up move, straight up and straight down. You can see on the left here, straight up, or it could be straight down. Or you get an arch formation or a cup formation. It's like a U or an inverted U. Within that, you get the pattern that I call the lowercase h. That is like a U-shaped pattern, but it occurs after you make a high bar and you pull back, and then you have a rally, and then it starts to fail, and then it tests the left side low. And it could be inverted, but it's the same principle. Straight up, straight down, arch, or cup. Two patterns of movement that has a return to where it was. The other one's just straight up from one point to the next. Hey, look at this. Beautiful cup formation. Goes to the high that was resistance way back in 27th week of 27th of July, 2018. And it goes all the way down to, so what was the price, did I say? 1.17. Plummets down to the 0.50 triple bottom low at 0.54, and it rallies back, and it rallies back in a what I call a left side, right side price time match, and a Chapman Wave inside wedge target line. It gets there in 3 bars early, and it goes to the high of the week of the 15th, 1.19, and now it's pulling back. So the MACD is good. Stochastic's very good at 85%. It's tipping down a little bit, but that's still very positive. And the weekly chart, monthly chart finally made a leg A, and it's a pretty decent length in price movement from 0.54 to the $1.19, a double. Now, this is what I'm looking at. Because gold, we just saw it, gold today is going to be an important measure of strength of gold. Based on probably what the Fed does, rates go higher, probably that could help the yields. And if if it helps the yields, then the TLT has to be pulling back. All right, sorry about that. I'm looking at this at 1.03, and Sandy, I would prefer to be getting in at about 0.98 and give it about I'd have to give it at least 10% on a $1.90, a 99-cent stock. You know, it's a big percentage, but it's nothing in terms of the inflection points it could have just intraday. So I'm going to say to you two things. One is you could just do a little nibble here at 1.03 because this is a really good move. If it does have a consolidation, it could take time. It could take some price, but my guess is that 0.95 to 0.92 could be pretty good support. My preference, if you had to say to me, where would you like to think about getting in as a completely fresh position? I'd say just for comfort, I prefer a full peak E so that you have at least 1, maybe 2 bars of rest and then get going again, but I don't want a deep correction. So I'm kind of stuck between the 103 and the 0.95 area. So somewhere in the 0.98, if you're talking and you say 5 cents, in a stock that potentially, if it has another if it institutes a new buy mode, it could go all the way to the 128, 133 area. That's a big percentage, but you know what? I just don't see it right now. I think it needs a little time. So I'm going to say to you, if you ask my opinion is I would wait a little longer and I'd probably look at it at about the 0.98 area. That's where I'd say, hey, that looks like at least a good starter entry, and I'd add to it if it starts to rally back into the 1.03 area. And I wouldn't add to it if it starts to pull back. I'd just give it a little patience and see what happens. That's my thinking. If you say I'm prepared to scale in, you could do a little bit now at 102, then I would go lower. I would say 0.95 is where I would add the next position. Hope that helps you, Sandy. And I do think it's made a decent low, and it's saying even in the 0.85 area, this is going to be, there should be really good support. So something's happened. It's finally woken up. It's an active stock now. GPL, yes, but for me, I might have to chase it if it starts to move up. I'd prefer to wait and have patience. Hope that helps you. Next question I had was, could I look at the Euro, EUR, USD? Euro right now is trading at 1.135, holding very nicely. The MACD is good. The stochastic's improving, but it's only at 66. I really like it to be in the 80% or higher area. Weekly chart is improving, but it doesn't look good at all. And the monthly chart, needs a lot of work, and it's got a flat stochastic at 14%. I don't know. I think it's going to, that's a problem. I think it's going to take a little while to get everything right there. Now, let me just do this. Let me just move that across here. Okay. So the euro is holding okay right now. Let's see if the dollar's pulling back. Of course, it's this afternoon that you really want to be looking at the dollar. Where did that go? Type it in again. DXY. Yeah, holding okay, up 0.08. So the dollar, for my subscribers, we've been long since April of last year, April the 4th, at 90. It hit 97.71. We've taken just the first time, just a month or so ago, we took the first little bit of profit. I think this is consolidation. Yes, it has got a cup formation in the weekly, and the MACD's weakening, but the stochastic's holding at 66, and the monthly chart really says so far it's still holding really well, sideways consolidation. I like that. Let's go to Victor in Paramus, New Jersey. Victor, how are you?
Good, how you doing?
Very good, thank you.
What do you think about X? Where's that going? I was supposed to be big hot stock when the president was elected on all this infrastructure that we don't have money to pay for.
Yeah, a little commentary there. Very good. So we're looking at X, which is US still correct. Trading at 20, up 0.02. Now this is so funny because it's like the chart I was looking at a short while ago with where did we go? That was the chart of AJRD with Bull in Mass. Hey, hold on a second. It's worth looking at this because I want to see what the steel ETF is doing as well as X. I'll be right back with Victor in New Jersey. Basil Chapman sitting for Larry Pesavento.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Everyone, we're back, and we're back with Victor in Paramus, New Jersey. We're looking at X as the symbol, trading at 19.93. This is U.S. Steel Corporation, trading down 0.05. Very interesting. What we've got here is that there was a rally off the low. It had a high peak F in the Chapman wave up at 24.74 on the, what was that? The 21st of February, comes down to the 19.06 area on the 8th of March. I would say that's a pretty deep correction. And now it's trying to rally. It had a bounce over the next 2 days. On the 12th, it hit 20.75, then it's pulled back. Now, the pattern I immediately grab right here is the arch formation, the one that I spoke about, that H pattern. So it started one H. It's trying to make another H. The lowercase h can go to an M pattern, and it could be stuck there for a little while. If it doesn't take out the low, in this case, 19.06, the low of whatever that was, the 10th, I think it was, but instead, in fact, doesn't even take out the low of this, of the 15th, of 19.57, but instead is able to rally to about 20.17 over the next 2 days. I'd say the rectangle formation, which can last a lot longer than your patience, is in store, and that's what I'd be looking at here until it breaks and then closes above, and this is really important in my work, it has to close above 20.75 for 2 out of 3 sessions in this particular formation. If it does that, it's cleared the hurdle of the 19s, and it should be on its way to at least start attempting an upward rally rather than just sideways. So my weekly chart says, not quite ready. That ugly candle of last week, 2 to 3 weeks ago, was trying to repair, last week, but it didn't take out the low, but it wasn't great, and we've done the same thing this week. So I'm going to say to you, Victor, I would have patience. I'm not sure if this is going to be a China deal. I'm not sure. I looked at the SLX. I'm not sure why it's not notated like I always do, but that weekly chart is much better than U.S. Steel, so this might include Newmont's, was it NEU? New Steel, I think it's called New Steel. So it might have some others, but it's saying that the low that was made back in December of 33.66 in the index, in the ETF itself, the SLX, trading down 33 cents at 40.08 right now, it's established some kind of a base in the 38s, and it's trading at 40 right now. So I'm just going to say that I've been watching this as well. There were periods over the beginning of last year where it was on my radar, and occasionally we'd have a trade, but either at AKS Steel or U.S. Steel. I've just held back. I'm just saying, you know what? I don't see anything in it right now, but I will say to you this, that if it starts to trade in the 18s at any point in the next 2 to 3 weeks, wow, it's going to take a tremendous amount to get it going to have a really strong rally. So I'd just be a little careful. I'm going to say to you also that for my purpose, I would prefer to be trading, to treat it as a trade if I got in, and to treat it as something I'm buying strength. I don't want to catch a falling knife. I don't want to buy weakness. I want to buy strength. So I don't know how you feel about it, but I would much prefer to be looking at it as a buy if it can go into the 20s, and I can see the MACD starting to improve. It's not good at all right now. Stochastics at 14%. That's no strength whatsoever. I just don't see anything right now. So I don't know how that fits into your scenario, but Victor, I don't see anything right now in X. So Victor, you there? Oh, so maybe Victor is listening on the computer. Okay, sorry, Victor. That's the story that I've got for you right now. So let's do a couple of things, folks. I wanted to do this to show you what I'm looking at here in the. I have a particular Chapman wave technique, and it's what I call the Chapman wave trend gauge. It's nothing but using the numbers of Richard Arm's trend gauge, and I probably use it completely differently to him. I use it just as numbers. I have a reading at this particular point that says within 2 days, there should be a very sharp 9 to 11 point rally in the E-mini futures. It can come from lower down. It's a warning to say, just be careful that if you are going to short from this level, you've got to be prepared that there could at some point be quite a big pop-up before that happens, or even it might have to wait another day, or it might be this afternoon. I don't know, but I'm saying that's just the indicator that I've got. Great heads up. It's got a great track record. I have it based on a low reading and a high reading, and they have in the 90s accuracy rate. I'm not sure if it'll work this time. We'll see. And all it says is just at some point you can get a really surprise strong rally. And that'll help the cash indexes in the futures, that is 9 to 11 point in the futures, which should help the cash index. All right. Now, the Dow is sitting right. It touched the 14-period exponential moving average, went to 25,753 low this morning. What is that number right there? 25,753 is the 14-period moving average. 25,753 is the low of the day so far. So it's gone right through the 9-period moving average, the green line there. I'll expand this so you can see it. Right there. Now, this is going to be important. I'm going to do this. I did this in the update, but I'll do it again. Look, Dow right now, INDU, we're looking at down 116. S&P, look at the different technicals. The S&P just went above the MACD, just crossed positive. Stochastics at 90%. This is just a pullback. It doesn't mean a thing yet. It will be something serious at 28.25, -7 right now. If at any point in the next 2 days, 28.12 is hit, that's another 12, 13 points lower, and that would be like another 130 down on the Dow. I'm not sure it's going to get there, but in the meantime, that's the green line, the 9-period exponential moving average. Weekly chart is still very strong. Look at the QQQ. QQQ right now is down 15 cents. That's 178.93. Fabulous MACD, really strong, 92% in the stochastic. On-balance volume is good. It's in the Chapman wave inside. I spoke about this yesterday, I believe. I said it's gone out above it, and that's a big positive, but it's the closing price that counts. And here we are back in the Chapman wave inside track repellent zone. Let's see what happens at 2:30 this afternoon. A pullback under 178 would be very negative. And anything from here up would be very positive. Now, I'm going to do something else. The IWM, yesterday I said the IWM was very weak, and that we're going to watch, because if there is a pullback in the S&P and the Qs, which were the strongest, and the IWM starts to hold quite well, you could get this little inflection that happens once in a while, where you remember the periods last year into early this year where the IWM was, the Russell 2000 was the leading on the way up, the leading on the way down. Now it's down 0.53%, the Dow is down 0.44%, and the S&P is down 0.28%. So it is kind of it's not holding all that well. It's actually looking quite weird. Look at the MACD. That's what I spoke about yesterday. Very, very poor technicals, and stochastics only at 53%. The day is young. Let's see what those E-minis have done. I drew something in earlier on. Yep, I'd circle this right here, and we've bounced to that 14-period moving average. The E-mini is only down 625. I say only because it could be down a lot worse. Day's young. We've got a little bit of a rally from the low of 28.2750 to the high just now of 28.3150. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So listen, we've got just a brief moment here. Let me tell you what I'm looking at here. If at 2:30 this afternoon, half an hour after the Fed minutes come out, I'm not sure if there's any conference or anything, the E-mini is able to rally and get above 28.43 and hold there. So maybe that's a little high. Let's just make it, if the S&P futures are up 5 points or more, so it's down 6, so that was 36, 41. Okay, 26.41, that I think that would be very positive. If we are down, we're probably not going to be down 6 as we are right now, probably be down a lot more. So that's how there is a news conference. All right, well, I'm not sure how much the news conference is going to change things, but let's just say at 235, suddenly 240, if the Dow and the S&P are down sharply, Dow down 50 or more, S&P down 7 or more, I'd say, you know what, expect a couple of days of, I don't think this is the top that a lot of people are looking at. I just don't see it right now. I could be wrong, price is the arbiter of a trend. So if that trend accelerates into Monday, that's or Friday afternoon, Monday, that's going to be something different. So I'm just looking at this and I'm saying, hey, those are the levels that I'm looking at. Make sure that you are looking at the market in a way that says, as Larry would say over and over again, check your potential losses, not your profits. Keep that in mind. And for those people who have gone heavily short over the last couple of days, I'm just saying to you, just be a little careful. Look, even the SMHs, which should give you a real big hint, they're down 31 cents at 106.85. If they down at, if instead of at 106.83 right now, at 235, they are below 105. Maybe you got something there, maybe even 104.50. Give it some room. Then I'd say, okay, be careful. If they're anywhere close to where they are right now, I'd say, hey, the MACD and stochastic are holding well. Weekly chart's looking good. It should go down, but it hasn't. Be careful. Hey, thank you for being here. Basil Chapman sitting in for Larry Pesavento. I'll be back at noon for my show at 12 o'clock. So thanks for being here.